Good morning, and it's me, Kenny Polcari, your host of the party. And here I am with my Dunkin' Donuts coffee, getting ready for another day. Today is Monday, December 27th. I hope everybody had a great weekend, had a nice holiday, and was able to spend it with families and friends. So what is it? What are the things that we need to know for today and really for this week, right? Markets pushed higher on Thursday as we moved into Christmas. That was a positive. U.S. futures this morning are also pointing a little bit higher as we begin the week. Treasuries are holding steady at 1.49%. Oil is down $1 as thousands of flights get canceled, and the media is going to have you believe in that demand destruction story. Again, I say it's an opportunity. And 2022 is sure to be an interesting year, right? We've got the Fed, we've got midterm elections, legislative policy, and an economy that are all at the top of the agenda. And what are we having for dinner tonight? We're going to have the Escarole and Bean Soup, but we'll get to that in just a moment. Look, investors, traders, and algos managed to push stocks higher on Thursday. In fact, the S&P closed at a new 2021 high of 47.25 after testing as high as 47.40, just 3 points shy of the 47.43 intraday high achieved on November 22nd. News that Omicron was spreading like wildfire across the country, doing very little to nothing to destroy investor or algorithmic appetite. Investors apparently focusing on the developments surrounding treatments for COVID and all of its cousins, right? You're thinking Delta, Omicron, and whatever is coming next. News that the FDA has now approved COVID pills manufactured by Pfizer and Merck, helping to settle the mood and allow investors to focus on the ongoing recovery and what the future Fed policy may look like. And yes, we heard plenty of news over the long weekend about flight cancellations, canceled bowl games, canceled Christmas, canceled party plans, blah, blah, blah. Yet none of that appears to be causing the outsized panic that COVID of 2020 did. And that makes sense, right? We're all learning to live with it. We are mostly vaxxed. We have therapeutics. And now investors are putting COVID in its place when it comes to investing, right? Because you should. How you manage your life during COVID, that's a whole different story, but we're not talking about that. We're talking about investing. Economic data on Thursday showed that durable goods orders were up strongly, right? Up 2.5% versus the expected 1.8. That was a strong number, positive. Consumer spending came in right in range of the target of up 0.6%. But analysts were quick to tell you that that was down from the rapid pace of November of 1.4% as they tried to turn a positive story into a negative one. Look, who's kidding who? According to MasterCard, holiday sales jumped by 8.5% year over year as consumers returned to shopping in droves. Spending more money on clothes up 47%, jewelry up 32%, electronics up 16%, with sales growing both in stores and online. Sales that started way back in September as the media convinced us that if you didn't shop early, you risked being left with nothing under the tree as the mania surrounding supply chain shortages and labor shortages and Omicron and COVID topped the agenda. Department stores saw a 21% increase year over year, while online sales surged by 11%. E-commerce now totaling 21% of shopping for the holidays. And that's good news for retailers, right? The XRT is up 40% year to date, which is actually down from being up 60% through November 22nd. And I think the pullback over the last month is just a result of investors taking money off the table in the outperformance as they reallocate money towards more defensive positions in 2022. UPS up 26% year to date, while FedEx is flat on the year, which actually makes zero sense to me, considering all the FedEx trucks I see everywhere I look. Every time I turn around, the FedEx man is saying, knock, knock, I'm back. Whatever. By the end of the day, the Dow added 200 points or 0.5%. The S&P's up 30 points, 0.6%. The Nasdaq added 132 points or 0.8. The Russell's up 20 points or 0.9%. And the transport surged by 225 points or 1.4%. Now look, this is the final week of 2021. Saturday morning, we're going to be in 2022 and get to start this all over again. The slate gets wiped clean, the indexes get reset to 0%, and the focus will now turn to real core fundamentals as earnings season begins in earnest on January 14th with the release of JP Morgan and the other big banks. JP Morgan, which is up 28% year to date, is expected to announce earnings of $2.96 a share. But I don't suspect that Jamie is going to disappoint at all. Remember in October, they were expected to report 297 and they beat it by 28%, reporting earnings of 374 a share. So what's he going to report this time around? And more importantly, what will he say about what 2022 will bring? Will the story be the same from not only the banks, but sectors across the S&P? Will a slowing economy and a more hawkish, aggressive Fed cause investors to rethink the plan? Now look, a funny thing happened to me over the weekend. A Twitter follower called me out because I said that if you were in the 40-60 age group, you should be all in terms of investing. He chastised me, saying that he thought not only was that bad advice, but he suggested that at any age group, nobody should be in any asset class. I don't know what this guy's thinking, because there's way too much risk. Now that's comical, not to be in any asset class, right? My response to the fellow is simple. Look, all in does not mean you own high-risk stocks with 100% of your portfolio. All in means use your head, account for your personal risk levels, account for your age, account for other obligations you have, account for your health, and then speak to your advisor and allocate accordingly. And if that means you put your money under your mattress, then go for it. See how that works for you. Look, remember, investing is dynamic. It is not static. It requires at least a biannual exam. I suggest quarterly, but some are happy to have just an annual. Whatever your comfort level is, it is. And that's different for everyone. So talk to your advisor. Okay, so there isn't any economic data this week that's gonna drive the markets, right? That's gonna be a significant driver for investors or for the markets, right? All the indexes remain below their 2021 highs, with the S&P the only one that appears to be ready to test that. All we need is an 18-point advance to pierce the intraday high of 47.43 and a 1 cent advance to notch another new 2021 high. So the question about the Santa rally is still really up for debate, because we are below the 2021 highs. And the Santa rally suggests that we need to push up and through to new highs before December 31st to have an official Santa Claus rally. You know what I think? I think we're right here at the top. I don't think it does, but hey, look, you might get that last push in a day or two, right? The algos will take over. The 10-year Treasury ended the day yielding 1.49% and this morning doing nothing. Oil is off by 90 cents at $72.91 a barrel, all as the flight cancellations being blamed for today's weakness. It's exhausting. It's the whole demand destruction story again, which I think creates longer-term opportunity for the long-term investor. The only two sectors that ended the day in the red on Thursday were utes and real estate. Every other sector ended the day higher, with consumer discretionary, the XLI, being the leader, gaining 1.4%, while industrials XLI gained 1.2%. The value trade, SPYV, and the growth trade, SPYG, each gained 0.6%. So they're neck and neck, although growth is outperforming value for the year. This morning, U.S. futures are up as we move into the final trading week. Dow futures up 21 points, S&P's up 8, the Nasdaq's up 38, and the Russell's flat. The tone is positive, and that's good. But investors should understand that the new year could bring some sudden swift moves, ones that will be painful for some while offering new opportunities for everyone. Stick close. Remember, investing is dynamic, which doesn't mean you whip it around every day. It just means get ready for a different market as the Fed and other central banks prepare to change the landscape. A swifter taper and talk of 3+ interest rate increases before the fall are all going to be drivers. Earning guidance in January will set the stage for the year as we learn what CEOs and CFOs are expecting and then how they are planning on responding to those expectations. Economic data will be more sensitive and significant as investors will look for hidden data points within those reports that might suggest concern for the Fed. Look, Jay will be officially confirmed by the Senate in mid-January, and then there will be 2 or 3 seats to fill. So who will Joey nominate? What will their positions be, hawkish or dovish? And who in the Senate will reveal what they want? Expect to hear plenty from the far left as they try to reconstitute the U.S. central bank. And that could be an issue for markets going forward, right? Then we're going to have the fight, right? It is midterm elections now in 2022. We're only 11 months away. So this year is going to be filled with all kinds of rhetoric coming from both sides as they each try to win your vote. We've already seen 26 Democratic House members are throwing in the towel. They are not returning. We got 8 Republican House members also throwing in the towel to spend more time with family. In the Senate, we got 5 Republicans and 1 Democrat that are not going to return in January of 2023. Right? And all this reminds me of the classic Dionne Warwick song, Promises, Promises, the 1968 classic. Many of you out there will remember it. And if you don't, just Google it on YouTube and pay attention and listen to it. It's a classic song. And it just brings me back to 1968. I was, 9 years old, 8 years old, whatever it was. In any event, many strategists and analysts are calling for an economic slowdown in 2022, which will leave stock returns or take us back to what is considered a more normal level, right? That is, if you can even define what normal means anymore. I suspect that we will see a return to the more moderate 10 to 12% returns all in, right? Divvies, all that stuff reinvested. But that's nothing but an estimated guess at the moment, right? Estimates range from flat to up 25% again on the year. So much can happen. That's going to change the course of markets in 2022. So sit tight. Be a bit more defensive in your if you're in the baby boomer camp, and then move out accordingly on the risk scale depending on who you are and what your risk profile is as a Gen Xer or a millennial or a Gen Zer. In any event, it is sure to be another exciting year in the markets. Remember, you can text the word invest to 21,000 on your cell phone to get my digital business card. Feel free to download it, send it off to me, send me an email, a text, give me a call. I am always happy to engage and talk markets, planning, thoughts, concerns, and ideas. You can also follow me on Twitter and TikTok at Kenny Polcari and on Instagram at KennyP1961. Okay, so what are we having for dinner tonight as we move into the whole last week of the year, and it's now winter time. It's kind of cold up north. It's cold across the Midwest. So I'm going to give you the Escarole and Bean Soup, right? And it's simple to make, but it's so good, right? And it's hearty, it's thick, it feels good. For this, you need fresh mutts. You got to cut that into chunks. You need pine nuts, olive oil, chopped onion. You need a Yukon Gold potato, peeled and coarsely grated. You need chicken stock. Or veggie stock. You can use either. I use chicken. You need the fresh escarola, roughly chopped. You need salt and pepper, golden raisins, which you've soaked in hot water for 5 minutes and then drain because you want them to plump up. Now, in a large pot, you want to heat some olive oil over the medium-high heat, right? Add the onions, reduce the heat to medium, and just cook them uncovered, stirring for 10 minutes. You want them to get translucent. Right? Now you want to take the grated potatoes, add those and cook those, stirring occasionally like 5 minutes more. Now add in the escarola and season it with salt and pepper, right? So toss it all together, let it all blend, let the escarola wilt, right? You want to continue cooking. You can cover it, stirring it occasionally, like I said, for 10 minutes or so until the leaves are wilted and tender. Then you're going to add the chicken stock, maybe 1.5 cups of chicken stock or veggie stock, bring it to a simmer, maybe 2 cups, depending on how much you're making. Then transfer the contents to a blender or food processor and puree until smooth. You want to taste and season it with salt and pepper if you need to. Remember, chicken stock can have plenty of salt, so don't add the salt until you taste it. Pour it back into the pot, bring it to simmer again so it's nice and hot. When you're serving it, you want to put it in the bowls and add chunks of fresh mozzarella, right? And the pine nuts and the sweet raisins. You can drizzle just a little bit of olive oil around it just to make it look pretty, and then you should serve it. It's a great dish to have. You can have it for lunch, you can have it for dinner. It's hearty, it's thick, it fills your belly, and it makes you feel all warm inside. In any event, it's another beautiful day here in South Florida. Yesterday was 80 degrees and perfect. There wasn't a cloud in the sky. I think today is really going to be the same. So for everybody up north, come to Florida. In any event, until I see you tomorrow, take good care.